is the 10 Mil Club weekly portfolio meeting for the third week of July 2026.
From the South Carolina Low Country,
It's the 10 Mil Club. It's the 10 Mil Club.
The 10 Mil Club is an informal group of people who believe that if we could reach $10 million of net wealth, we'd have the financial security that we want. Kind of a short show this week. It's Monday afternoon after the markets closed. I just had a job that was blisteringly difficult that I had to work on over the weekend and into Monday morning. And so here we are doing the portfolio meeting a bit later than we would really want to. The market in general, here's the VIX. Market in general still has relatively low volatility. The VIX is below 19, 18.72 is where it closed today. It's elevated a little bit over the last few trading days, but 1872 is really nothing to be particularly concerned about. The MOVE index, or the VIX for bonds, so to speak, is elevated a little bit, but again, not that much to worry about. The trend is interesting. I have this trend line set here as if it were its own stock, but it's not. It really hasn't shown a lot of great concern either. The percent of S&P 500 companies trading above the 200-day moving average really took a serious turn over the past couple of trading days. Now that includes today, which is July 27th. So a little more current market sight than we usually do. So closed at 68.5%, and the percent of S&P 500 companies trading above their 50-day moving average closed at 71.5%, which is really pretty high. I believe there was, I don't believe it's an official ceasefire in the Strait of Hormuz, but it was the two sides kind of stopped firing, so to speak. And as a result, oil and gas went down, which is interesting because the Strait of Hormuz is more of an oil conduit than it is a gas conduit. It is a gas conduit, but it's more of an oil conduit than a gas conduit. So what we're seeing still is a market that has decent breadth, decent strength. There's a lot of stuff happening underneath the surface of the market, but as far as just a wholesale sell-off, we're really not seeing it. We'll show these while I'm here. So this is the S&P 500, SPYM. This is our chosen ETF. SPY is another one. VOO is another one. There are plenty of them. We like this one just simply because, SPYM, we like this one just specifically because of the share price. It keeps testing this. This is the 50-day moving average. Trend lines like this are arbitrary, we know that, but it keeps touching that trend line and not really breaking downward. It was in what might have been considered some sort of rising consolidation pattern right in here, and then it kind of broke above that. So I guess if we were to fix it the way we wanted it, it'd look more like that. That's just us moving lines to accommodate, but basically to create our own confirmation to feed our bias. So anyway, for all means and purposes, the market, the uptrend is really kind of still in place. This is the 200-day moving average. These two we keep on tap. SH is a short S&P 500 ETF. We don't recommend sitting short the S&P 500 for long periods of time, but we have this one on tap just because the market seems awful overpriced and highly valued. So we keep SH on tap for when we need it. We don't need it yet. Putting the show together, this one right here, TBF. So that's the short 20-year Treasury, which elevated significantly over the last month and a half or so. Well, month really. And then let off a little bit in the last few trading sessions. A sell-off in bonds is going to increase. A sell-off in bonds is going to increase the yield. The price of bonds will go down. This is short the price of the 20-year plus bond, so the price of that bond goes down. This ETF will go up. Now, just so you know, this low down here is like, let's see, the low is 2381. This high right here before it backed off just a couple of days ago was 2523. So this is a positional sort of thing. This is a way to trade the long-term bond market, but in truth, you're not going to get rich trading that one. We watch it really more for a trend, for a change in markets, in long duration bonds sort of thing. And then the this one, let's get it up here. All right, PSQ. So this is the ProShares Short QQQ. QQQ is an ETF that tracks the NASDAQ. NASDAQ is tech heavy. There's a lot of money rotating out of tech lately. And so this is a stock that honestly, if this was a stock on its own, we probably would be at least looking for it to retrace to the 21-day EMA and then buying it, because we have an RSI that is above 60. We have a DI plus. Let's do this real quick. We have a DI plus that's well above the DI minus. We have an increasing ADX, and we have a little bit of an improving relative strength against the market here. So the short QQQ or PSQ is one that we probably need to keep an eye on, because honestly, down in here, if this was an actual stock with actual equity to it and not a short something, I would probably already be in it. So there we go. All right. So with that, let's get to it.
10. Milk Club.
If you're following us on our Facebook pages, actually we have a Facebook group and we have a Facebook page. You're probably up to date on what we've bought and sold and been stopped out of recently. Last week was a pretty active week, and ABM is one we actually have owned this now longer than just 1 week. Picked it up at 46.45. We're up 4.33% above the 21-day moving average, increasing relative strength. The DIs are in the right place where our RSI is showing strength. So we're sitting tight on ABM. CVS we still own, and we are up 4.89% on CVS. It just did a tick back to the 21-day moving average. So far, still okay. The technicals deteriorated a bit over the last little bit, but our last trend high was in the overbought area of the RSI, so it's still holding. CVS, not going to do anything there. DCI is Donaldson Corporation. DCI we actually bought in the previous week, I believe, at 89.50. We're at 93.19, which is up 4.12%. And this, if you read Mark Minervini's books, which I have read several of them, this right here, this dip where the price goes down and the volume decreases as well, he calls a dry up. And then up the stock goes after that. Technicals are in good shape. RSI is in good shape. We're still holding DCI. Probably would not, if you, by the way, at the end of every day on our Facebook page and in our group, we post everything we did in the day. If we didn't buy or sell or get stopped out of anything, we still post what we were watching in the day. So you check in with us every day. And the truth of the matter is, if you decide to do something similar to what we do, we have found that buying it at the very moment we do or selling it at the very moment we do isn't really all that beneficial. But at the end of every business day, we post what we did. So I will put the once the video is posted, I'll actually put the links to the Facebook page and group down below in the comment section. Please give us a like on our videos. Please subscribe. We would love to hear from you. Comments, stocks you'd like us to look at. We'll certainly, right now we'll take all comers if you'd like to be in on the conversation. So please do. Please post on our Facebook page, join our group. We'd love to have you with us. There's no charge for any of it. We don't make any money of it. We don't even have ads turned on. We don't have enough viewers to turn ads on. So come one, come all. We are simply here looking for the truth and a way to make money. Dollar General, DG, we actually bought last week at 116.80, and we are now up 5.5% because Dollar General currently has a decently evolving looking set of technicals. Fast, F-A-S-T, Fastenal, we bought last week. We're up 7.37%. We bought it at the very, very low down in this area. Once it turned, we were waiting for the turn at the 200-day moving average. Once it did and bumped, we bought, and we've been doing pretty good ever since. We're now back above the 21-day moving average, which is a concern, but you can see, let's put a year of Fastenal up here. Fastenal does a lot of not respecting its 21-day exponential moving average. And so when we bought it down this way, we were truly just popping a trend line in, which trend lines are somewhat arbitrary, but we popped it in there and gave it our best shot. So we've also, I will say this, we've also begun tightening up our stops here. We have to this point used a 7.5% below our purchase price stop. We found that it only takes a few 7.5% losses to really kind of sell your portfolio's returns down the river, so to speak. And so we've begun trying to nail our entries better and set our stops a little closer. So if you're following what we're doing, that's what we're doing more of. We'll see something like this and we'll go, well, I don't want the stop. Like this stop right here might actually even be a little too low, but the original stop on Fastenal was down here somewhere. And we were like, no, we don't want it that low. We're going to put it right here. So here pretty quick at 7.37%, another day or two, we'll probably raise our stop. GGG, Graco. Graco had earnings that I believe were a bit of a surprise. At least they were as we're interpreting the price of the stock. So we watched it follow through for a day after the earnings, and with technicals in place, we bought Graco, GGG. So we're up 1.25% after only, I believe, one trading day of owning Graco. General Mills. So GIS was a point, was kind of a pressure point to me late last week. So I'm going to put up 2 months, 1 hour of General Mills. Hopefully you saw before I changed it, I'm going to do like this. Here's 6 months, right? So the 21-day exponential moving average is right here. General Mills has a tendency to dip right below it and come back. And dip right below it and come back. It's right below the flag here. Then dip below it and come back. The way we saw it, our stop is down here at 179. That's I'm sorry, 179 of them at 33.93. So what we did was this. This was Friday's, I guess you might call it kind of a come to Jesus moment, I guess. But we followed General Mills. We bought it here, watched it go all the way to here. And again, we are position traders. We're not trying necessarily to be swing traders. We do a little bit of swing trading. We'll show you one in a minute that we are planning to swing trade, that we're in. We're not big strip swing traders, or we're definitely not day traders. We're not really short-term traders at any point. We are positional investors, we try to be. And so we're looking for a trend that we can ride, but ride it for a fairly long period of time. The market hasn't been giving us a lot of that lately. It's been a little tough to do. So back to GIS, we saw it come all the way down here, and our trend low was right there. You see where I've set the line, the dotted line. That's the trend low over here. If it went 1 penny below that trend low, I was going to turn from my desk and open a conversation about that stock as to whether we should sell it now instead of waiting for the stop. And this is what we've become here in the group, is far more reactive to the point of being proactive. I'm sorry, far less reactive to the point of being proactive, so that our stop may be down there, but we might be selling something even just a penny or two below the previous trend low, because there are a lot of jitters in the market right now. And it didn't. It came down. Its behavior changed right there through much of that day. It dove this day. That's overnight. Then through the rest that day, it kind of rose just slightly through the day, and now here we are. So pressure's off. We're actually almost back in the positive. There was a little bit today where we actually were up just a touch on General Mills, I believe, if I looked at it correctly. But I only turned in the really difficult job earlier today, and so I've been a little bit behind, and the group has missed me. Global Ship Lease, GSL, I'm going to go back to my 6 months, my patented 6 months. Global Ship Lease, we're up 12.02% on. It hit a new trend high in the stepwise pattern. So here's the stepwise pattern for 6 months. It hit a new trend high and then backed off a little bit. It's still up at the very, very top of the Keltner band. 21-day moving average is way down this way. Look, if I could make 12.02% on every single trade I made without fail, I probably would take it. But there we are. We had a conversation about it previous to the show today, and the conversation went like, well, the technicals look good, the relative strength looks good. We actually hit overbought on the RSI in this new trend high over here, so we're good. It may actually back off a little bit, but the trend is still in place, so for the moment, we're good. So GSL keeping. HPQ, if there is a swing trade among us, it's this one and probably another stock or two. HPQ we bought on the way down out of this, and one thing I've learned lately, or at least one thing it looks like to me, would love to hear from somebody who knows more about this than me, but it almost seems like a stock will turn, and then you can see the 21-day moving average pass above the 50-day right here, still below the 200-day right here. But all of a sudden it'll just catch a wave, and but then it'll come back. But quite often it'll come back to something that's in line with these higher trend lows as we go. We probably bought HPQ a little too quick. It turned here and then didn't follow through. It came back for a while and then turned. We are now actually up 9.5% on HP. Sorry, we got stopped out there and then bought it back here. So the first time we bought it and got stopped out too early, and then to our credit, we stuck with it. So that's been something. We've been really, really bad here in the group to get burned on something like that and then go, well, we're never going to look at that again. We are kind of not doing that now. We actually saw it turn. We thought, well, let's try it again. So we did, and so far we're up 9.53%. In steel, we have talked about buying again, but as of yet, we don't have. I have a note here that says we're beyond earnings, so we're fine. We're waiting for some sort of placement in the lower half of this regression channel. Now, if it breaks out and just takes off, that'll be one thing. But beyond the earnings here, we're kind of waiting for some sort of retracement here. The longer that we go on beyond earnings and the stronger that trend is, the more we might actually just go ahead and buy into it, but we have not yet. MDT, Medtronic, this is the difficulty sometimes of not being able to see the stock market for a few days. it went down in this area. Now, I did see it get down in this little area right here, but it didn't cross below the bottom of that regression channel that I have, so we never bought Medtronic. And it is back up a bit, but we just didn't buy it. So that's what happened, and that's the way it worked. And honestly, if we knew the future, we could be intergenerationally rich in 7 to 10 business days, but none of us know that. NEXN, we've been watching, and this is kind of, this is an example of what it's like when you don't have a couple of days to actually watch the stock market. We missed our opportunity on NEXN. Right through here, it came to the 21-day EMA, moved on Friday, and then today, for NEXN, a 43-cent move is a pretty nice size move. A slide back down to the 21-day moving average would entice us back into it. But we looked at it late in the day today and thought, well, you know what? If that's gone, we'll have to wait for another opportunity, and so we will. We just kind of missed that one, and you know, we can't catch them all. OSG we got stopped out of. It had a rebound today, but we got stopped out of it at $5.68. It just simply broke the 21-day moving average and then took a few days down like this. And so I don't know when or if we will be buying back into OSG. Seems like a pretty decent company. PCT, that was this past week. PCTY, we don't own at the moment, but we've been watching it move right onto the 21-day moving average, and then today it really moved up, and its earnings are coming. We haven't been buying it because those earnings have been coming. In this market, in this atmosphere, we're a little bit leery of buying things going into earnings because it seems like everything, even good earnings, at first go down. And there's just a lot of market jitters out there. So we didn't buy PCTY yet and are just sitting on it. PGNY is actually the largest single loss we have. And check this out. It's our largest single loss, but it's 2.29%. That's how much down we are. We'll see. If I'm being perfectly honest, I looked at this on Friday. The Russell 3000 is up about 30% over the last year, and based on our active management, we are actually down 2%. So as of yet, we only know so much. But the fact that our smallest loss right now is 2.29% and has turned upward from the 21-day moving average kind of indicates to us that maybe we're improving. We'll have to see over the next little bit. RRC, I'm sorry, I misspoke. RRC is actually our largest down at the moment. It is down 4.1%. Now, we bought this late last week. This is a natural gas exploration and production company in the Appalachian area of the United States. The fact that it went down over $1 today, it still is above its 21-day moving average. So there's that. We kind of had a conversation today that below that 21-day moving average, we may need to talk about it. The funny thing about this company and what it does, the management of this company, when they make a lot of money, they know exactly what to do with it. They buy back shares, they pay down debt, not in that order. They improve operating efficiency. Their fundamental scan looks very good. Now, whether the stock takes us where we want to go and does it in the amount of time we need it to, that's a whole other conversation. And we will have to keep an eye on that from a technical standpoint. But there's an underlying set of fundamentals here we really, really like. The company's doing well. Now, this is not on our list. /NG, which is front month natural gas. This is the last 6 months of it as it would stack up against Range Resources stock. It took a bit of a dive. Again, I say a dive, 13 cents. But natural gas doesn't have a tendency to move all that much. It, $3 per BTU natural gas is actually a pretty robust price, so to speak. So, $2.75 is still not bad. It's just it took it down, and so Range Resources stock also took it down. So that actually is the largest we have. It's 4%. Across below this EMA, even though our stop is down here at 36.52. We might actually consider just getting out of it, and tomorrow we'll kind of tell that tale. So keep your eyes posted on the Facebook page for what we have going on. Scholastic, we got stopped out. Now, this may be the last time that I ever encourage the group to invest in a stock that has fundamentals I really kind of don't like. Scholastic, despite, this is only 6 months of it. Here's a year of Scholastic. 1 year. SCHL. Despite that uptrend for a solid year, it really had fundamentals that kind of didn't inspire me. And I couldn't figure out why the stock was going up so much. Apparently, it doesn't make any difference. If you don't like the fundamentals, the problem is if you get stopped out, you won't like the feeling of getting stopped out, and you'll go, well, I didn't like the fundamentals anyway. Well, maybe that's one we shouldn't do anyway. So that probably is the last time I'm going to buy a stock with fundamentals that I don't really believe in. So there you go. That one comes off the list right in front of you. All right, SCI Service Corp. We talked about this one week in and week out. Right now we are up 11.62%. At one point today we were up over 12%. This, if there's a swing trade that we have, this is probably the other one. Global Ship Lease is probably one, and Service Corp is probably another one. This is a really valuable company. It's a death care company. It's the most boring business model on earth. But these people also know what to do with money when they get a hold of it. They bought back a bunch of shares down in this area. Their earnings are coming. I don't know what their earnings are going to do, but we have room to move. We are expecting more of an 87 sort of price up in this area. So at 82.73, we're not really to the sale yet. It may drop back down before earnings. I really don't know, but SCI is really kind of a lovely company, and I'm really glad we found it. We got stepped out right here on this ledge, stopped out on this ledge, which if you cover, like I'm going to put this line right here. If you go all the way up to the point in time right there, if you could cover everything after that, you could see how we did that. It went down, it came, it kind of acted like it was hitting kind of a longer term low. If I gave you a year of it, there's a year, 1 year there. All right, it looked for all the world like it was at a buy point, and we bought it and we got stopped out. Now, in truth, something has changed in our thinking since we got stopped out on SCI the first time. Now, if we made that purchase, we would probably set the stop just a few pennies, really, maybe a nickel or a dime below the last trend low in that, and it'd be sold. If it did anything that looked like that, we would not wait for 7.5%. We did wait for 7.5%, and several of those, and you've sold your portfolio down the river, so to speak. So we do this differently now, and that was only a couple of months ago. So our evolution is definitely in place. Right now, we're up 11.62%, and we are gunning for this area up here. Earnings are coming, but we'll see how it happens. SOFI, we have not bought yet, and one reason we have not bought it turned, let's go back to something that's a little more palatable here. 6 months, all right. It turned at the bottom here, and if I showed you 2 months, 1 hour, which I like to go to a lot, it turned. The problem is their earnings are coming up, and SOFI is the very kind of thing that can just get killed with earnings. And you're probably on the other end saying, well, it can go way up on earnings too. Not going to debate you or argue on that, but it's also the kind of thing that can get really killed on earnings, and it can get killed on earnings after spending 6 months doing this. So we are not in SOFI as of yet. TFSL, our bank holding company in Ohio, so far is okay. We're up 1.3%. We're simply migrating back to the 21-day EMA, which is also rising to meet the stock price. And so far we're okay. And finally, we have to cover TMC, the metals company, because we are the 10 mil club, and people come to us looking for TMC, the metals company. We'll probably need to just take our time one day when we're bored and do an actual fundamental analysis with some technical discussion on this. Don't buy this. This is a junk stock. Anyway, we've been over it in previous meetings. I don't want to go over it again. Their earnings are coming, and the market is very concerned about that. Negative technicals, bad strength. Don't go buying this. It's just absolutely not worth it. And that is the way we see it. So from all of us at the TMC Control Room, we thank you for having been with us. Please give us a like on our video and consider subscribing. Especially like to thank our 10-year-old club singers, SOFI and Presley, and our announcer Jackson. And we will see you next time on the
10